Good morning, everybody, and welcome to the morning volatility report. How is everybody doing today? Hopefully, you're having Ian. I owe you a spreadsheet. I didn't forget. Um, I've just been up early doing other stuff. Anyway, uh, okay. If you're going to take a volatility trading course, take it from us. Right here, Option Pit Professional Volatility Trading Course. Look at volatility the right way. Basically, for an eighth on a 10 lot, you're going to learn something. If you don't, we'll give you your money back. How about that? Anyway, to get an idea of our teaching style, take a look at this webinar from Mark on understanding the VIX volatility. Mark also teaches several classes on the CBOE about volatility. All right. With that, let's go to, wow, I guess McDonald's is selling a lot of breakfast. Let's just take a look at a couple things. We're getting a little lift in Twitter after getting sold off in Morgan Stanley yesterday. We'll take a look at this as well, I think, in the pit report or in our chat today. However, the big story, Mario Draghi, Super Mario, is coming in and crushing the euro. Good for our some of our positions here at Option Pit. I think we liked. Yes, that was a nice gift this morning, I have to admit. I'm still letting some run. Thank you, Giovanni. Cheap volatility. Who knows where it goes now? I don't know, but at this point, QE generally market stabilizing. QE from anywhere has been market stabilizing in the past. So and what do we have? NDX up 61 points. Russell up about 1%. Now, here is the story. Okay, look at our move in VIX. Okay. We retraced. We lost about half the rally we had in the November future yesterday. The near-term low was 16. So what I'm looking for is that is essentially right now my short volatility. That has been our bounce point twice already. That is, again, my November VIX target until the Fed comes out and says whatever they're going to say next week, which right now, if the Europeans are still in QE, means we're probably not going to do a whole lot. So again, keep an eye on the November future. It has been very active. Again, like I said, trading 16. What's today is Thursday, so it was trading 16 on Tuesday. Traded a little over 18 yesterday. Was bid into the close with VIX in general. And the only thing that I don't like about, obviously we've had a huge rally off the bottom on really nothing. Remember, we had a sell-off that China was falling apart, and we had basically what I'll call like a mini crash in mid-August. It took a while for the volatility to come down. The stuff I don't like that I see is this stuff, and I'll just tell you why. Let's get the VIX chart up here. Okay. Okay, volatility moves. I get that, right? But we keep rallying. The vol rallies we have are very sharp in net terms. Almost two handles from the lows. That would look like kind of a mark low for the settlement for VIX, and then we close at the high of the day. Huge move for that type of at the money options or out of the money options. Pretty big. Again, similar move that we had the day before. So volatility is very skittish relative, to the type of moves we're seeing in the SPY. You're only seeing half a point moves here. And I, as of right now, the SPY really kind of stuck in a range. 202 to 20. Today is a breakout move, right? But we were in a range. We were in a one-handle range for 4 straight days. You shouldn't have the type of moves we had in the VIX, the breadth of move with the lack of movement in SPY. So the only thing I'm keeping an eye on in that part is, if that continues. Because there's certainly the market is literally overall the realized vol has come down, but it is on a hair trigger to move again. So any vol product play, I think you still have to, even if you're leaning short into the 16 handle on the November future, you still got to have some sort of upside protection. Indicating what, Ron? I don't know. I just think there's still enough daily movement and volatility that even if we have kind of the Santa Claus holiday effect sort of pulling things down, the movements are too sharp to ignore the upside. That's the simple. Normally I could be more comfortable at this level, being a little more all-in short volatility, getting us, looking for slightly lower levels, but I'm not there yet. Still too skittish. As far as individual names go, we'll look at some earnings plays and stuff like that. VRX is a name we'll look at. Even though that Einhorn, I guess, is buying more, it recovered yesterday somewhat from the lows. Still kind of messy. We'll take a look at that. Still a little messy. But even looking at the volatility here going into tomorrow, there might be something interesting in here to do. You got one day, you've got 20% out of the money options trading for $1. That's not nothing. Is it dangerous? Yeah, fully dangerous. But we'll see if we can do it in some sort of risk-controlled way. Tesla hasn't recovered either from essentially the bad consumer report. So 2 kind of big name stocks, VRX and Tesla, where basically research reports, whatever, sending them down quite a bit. And neither has really recovered anywhere close to where they were. As far as the rest of the market goes, these QE-induced rallies, how you've seen them. I don't get in the way of them, but I would like to look for some kind of pullback to fade it to some degree. But we can be up 1.5% by the end of the day with no trouble. Okay. What I would like to see, we're trading at, I think, new highs for the SPX. I would sure like to see that VIX back down to the lows, and we're still not there yet. So again, that's just enough to make us think the rally doesn't hold on. All right. At least for more days until I can see this really start to mark down a little bit. All right, everybody, have a good day. I will see you in the chat room today. Bye-bye.